Assalamualaikum and hello Puan MRT as our lecturer for DPA 10183 Business Accounting. We are from class DIB 1. So now we are going to present our assignment project, which is the title Crime Book Entries. So let me introduce our presentation member.
Hi, my name is Muhammad Haris bin Nordin and I'm as a presenter, the first presenter, and my matrix number is 01 DIB 21F 2013.
Hi, my name is Muhammad Azaikal bin Kashfi. So I'm the second presenter. My matrix number is 01 DIB 21F 2015.
Hi, my name is Hanin Zuhaili. As a third presenter, my matrix number is 01 DIB 21F 2018.
Hi, Assalamualaikum warahmatullahi wabarakatuh. My name is Muhammad Haris bin Nordin and at number matrix 01 DIB 21F 2013, and I'm as a presenter number 1. So I will discuss about sales special journal. So special journal divided by 4 topics. Number 1 is purchase journal, number 2 is sales journal, and number 3 is return outward journal, and last but not least is return inwards journal. So the first one is a purchases journal. Definition of this purchases journal is a special journal used to record any merchandise purchased on account. The entries in this journal are made based on the invoice received from the supplier on the purchase date. So refer from this definition, purchases journal always used in business world. Then this journal only record purchases by credit or by credit. After that, accountant can record the transaction easily. For your information, purchases journal no need to record when purchase of the goods are only once. After that, other names used for the purchases journal are the purchase book, purchases label, and the credit purchase journal. Format of purchases journal. So the format when to do a purchases journal, you must have a title and then have a page top on the right, and then have a date, supplier accounts credits, invoice date, payment term, PR is PR stand for posting reference, and then account payable, credit, and the third last this column for debit. After that, when you do this, you might need to total all this credits, account payable, entry, item last. So example from purchases journal, you can see this purchases journal, date 2018, have a 3rd February, 5th February, 30th February, 20 February, 25 February, and 28 February. So when 3rd February happening, supplier account credited is a Horny Supplier Corporation, and 5th February is Ace MFG Corporation, and 13th February is a Winets and Corporation, and 20th February is a Smarts Corporation, 25th February is Ace MFG Corporation, and 28th February is ITT Corporation. So invoice date is when the company purchase all the credits by this company. So the payment term is N/13, 2/10, and /13, 2/10, and /13, 2/10, and /13, and same as February 20, and the last one is N/13. So the posting reference is AP2, AP1, AP5, AP4, AP1, and AP3. Account payable, when the account payable credit is 30. Sales journal. Definition of sales journal. Sales journal is a subsidiary ledger used to store detailed sales transaction. Its main purpose is to remove a source of high volume transaction from the general ledger, thereby streamlining the general ledger. This includes transaction number, account number, customer name, invoice number, and sales amount that are typically stored in the sales channel for each sales transaction. When a transaction is recorded, the account receivable account is debit, while the sales account is credit. So when accounting record the transaction, the accounts receivable account might be debit, while the sales account is credit. So the second one is a sales journal only store receivable. This means that sales made in cash are not recorded in it. The sale made in cash will instead be recorded in the cash receipt journal. In short, the information stored in this journal is a summary of the invoice issued to customer. Format of sales journal. The format of sales journal is a date, account debit, invoice number, PR is a posting reference, account receivable, CR customer revenue, credit customer revenue, cost of goods sold, DR is a debit revenue, inventory CR is a customer revenue. So after that, we total this account receivable and cost of goods sold, and have a page on the top right and the right top. So example from the sales journal, the same as a purchase sales journal, but they have one difference. Is it the last three column? This sales journal have a account receivable and cost of goods sold. And then after we record all the amount, account receivable, cost of goods sold, and then we total it, we can get 2,115 from account receivable and 1,015 from cost of goods sold. Return invoice journal. So the definition of return invoice journal is a return invoice are goods returned to a business by its customers. They are goods which were once sold to external third parties. However, because of being unsatisfactory, they were returned by the customer. They are also called sales returns. Invoice return reduce the total account receivable for the business. It is a sales return, and on the other, it is a purchase return. The transaction in both cases is reversed and the related sale or purchase is nullified. This reversal reduces the total sales of a company, and the deduction is shown in the trading account. A subsidiary book called Sales Return Book is prepared to record all such entries. So the journal entry for returns invoice. Journal entry is they have a date, 2019, details, note number, folio, and amount. Return invoice. This is a reduction in revenue for the business. For customer, this is a reduction in receivables for the business. Returns invoice account debit. Debit the decrease in revenue to customer account. Credit the decrease in assets. So this is an example from return invoice journal. Return invoice account is 10,000. To Star PVT Ltd accounts 10,000. Return invoice journal. They have a date, details, note, folio, and amount. Dates is 2009, July 6, July 13, July 26, and July 31. 6 July have a Utilitary, 13 July have a Jerry Hull, 26 July have a Larry Hetman, and 31 July transfer total to returns invoice account. Amount that the return invoice account. Return outwards journal. The definition of return outward journal is a good returned by a customer to the seller. They are goods which were once purchased from external parties. However, because of being unsatisfactory, they were returned back to them. They are also called purchase returns. Outwards return reduce the total account payable for a business. It is a sales return, and on the other, it is a purchase return. The transaction in both cases is reversed and the related sale or purchase is nullified. Purchase return reduces the total purchases or accounts payable of a company, and the deduction is shown in the trading account. A subsidiary book called Purchase Return Book is prepared to record all such entries. So, from this definition, what I get is when a customer return the inventory to the seller because maybe they have a defect on the inventory, and they call a purchase return. And the journal entry for return outwards. The journal entry has a supplies account debit the decrease in liability to return outwards account, credit the decrease in expense. Supplier, this is a reduction in payable for the business. Return outwards, this is a reduction in expenses for the business. And this picture is a journal entry for return outwards. Trading account format. We have a particulars and amounts. This on the left side is a debit and the right side is a credit. So example from a return outwards journal, Star PVT Ltd account 50,000, and to return outwards account 50,000. Return outwards journal, dates, details, notes, folio and amounts. The return outwards journal.
So I will continue with the topic cash book. So basically, cash book is the difference between the sum of balance of the debit side and credit side, shows the balance of the cash on hand or bank account. Cash book plays a dual role as it is the book of the original entry of the company as well as book the final entry. So this is one of the example of cash book. So there are a lot of importance of cash book. One of them is since only cash transactions are recorded in the cash book, it is a special journal. Second is the cash book serves the purpose of the journal and ledger. Third is the cash book always shows a debit balance. Fourth is the balance of the cash book always means cash in hand. The balance of the cash book and cash of a cash box must be equal. Last but not least, non-cash transactions of cash books are transferred to a relevant account in the ledger. Cash book is both a journal and a ledger. This is because after the transactions, these are recorded in the cash book in chronological order of dates with explanations like a journal. It's also how transactions are posted into the ledger from the journal is followed in the case of posting transactions to the ledger from the cash book. It's also a separate special journals are maintained for various transactions. Cash book is similarly maintained for cash transactions. Cash transactions are recorded in the cash book according to debit and credit. Other than cash books, no subsidiary journal is maintained for cash transactions. Cash book is a ledger. Why? Because the format of the cash book is similar to that of a ledger account. Like a ledger account, the cash book consists of two sides, the debit side and the credit side, if prepared in T format. Like ledger accounts, the balance of the cash book is determined and transferred to the trial balance. The cash book serves the purpose of the cash account. In such a case, the cash account is not prepared in the ledger. So actually, there are a lot of advantage of cash book. Cash receipts and cash payments for a particular period can easily be ascertained from the cash book. Since cash transactions are recorded in the cash book, it becomes convenient to find any cash transactions for future reference. It avoids the generalizations of huge cash transactions. The amount of cash in hand can be ascertained at any time, and it can be compared with the cash in a cash box. This ensures the accuracy of the cash book and detects misuse or misappropriations of cash. Cash book minimize time and labor in preparing a ledger as it performs both the journal and ledger functions. Proper maintenance of the cash book influences the cashier morality, which refrains him from stealing cash. There are two types of cash book, which is double column cash book and three column cash book. So this is the example of double column cash book. At the credit side, there are date details. Same with debit side, there are date also with the details. So basically, the difference between double column cash book and three column cash book is three column cash book have discount. Meanwhile, double column cash book do not have discount.
Hi, my name is Hani Zuhaili. My metric number is 01 PIB 21F 2018. As a third presenter, today I will present to you about General Journal. The General Journal is the book the entity firstly record all of the daily financial transaction in it. It is also called a book of original entry because all of the transactions are recorded in this book before moving to other books. Secondly, the entity also record other non-financial transactions that occur in the business into this book also. That non-financial transaction included depreciation, adjustment as well as an accrual. Those financial transactions including sale transaction, purchase transaction, cash receipt, cash payment and many other important financial transactions. The uses of General Journal. A journal can also be used in investing. An individual trader or a professional fund manager can form a journal where he records the details of the trades made during the day. This record can be used for taxation, audit and evaluation purposes. Second, this record can help traders to evaluate their trading and investing performance over some time and provide that information about their failures and transactions. The traders can learn from the past and improve in the future trade for their investment. There are all other transactions not entered in a specialty journal account for in a general journal. It can have the following types of transaction. First, account receivable. Account receivable is the money owed to a business by client for which the business has given service or delivered for a product but has not yet collected payment. They are categorized as a current asset on the balance sheet as the payment expected within a year. Second is account payable. Account payable is an outstanding amount to be paid to supplier, vendors and service provider for their goods and service. This account in general ledger mark the amount that companies owe to third-party providers and must be paid within a short period. Third is accumulated depreciation. The accumulated depreciation of an asset is the amount of cumulative depreciation that is being charged on the asset from the date of its purchase until the reporting date. It is a contra account. which is the difference between the purchase price of the asset and its carrying the value on the balance sheet, and is easily available as a line item under the fixed asset section in the balance sheet. Last but not least is interest income. The revenue earned by lending money to other entities, and the term is usually found in the company's income statement to report the interest earned on the cash held in the saving account, certificates of deposit, or other investment. There are other examples like expenses and equipment. General format. It provides the chronological order of all non-specialized activity. It consists of 4 or 5 columns. In general journal, we must have a date of transaction, short description or memo. Third is debit. Fourth is credit. Last is reference number. The journal process flow. After recording the transaction in general journal, we post a summary of all the transactions in each journal to the general ledger, which contain all of the company's record. An account is a record of a specific asset, liability, equity, revenues, or expense item. Also, example of accounts are account receivable as an asset account, account payable as a liability account. Third is retained earning as an equity account. Fourth is product sale as a revenue account. Last is cost of goods sold as an expenses account. Here is the example of general journal. Like the previous slide, in the general journal format, we must have a date. Like you can see in the example, there is a date, short description, debit and credit, also the reference number. Here is another example for general journal account, which is 4 column account. There is a date, also short description, debits and credit. Thank you. That's all from me, Hani Zuhaili. Thank you for hearing my presentation.